We're going to change gears again now. Rapid fire round. This will be short and punchy, so we'll get right into it. Biggest surprise of the season in terms of a positive sense? Michael, I'll start with you.
Biggest positive surprise in reporting season was Megaport. They had a very strong quarterly result and the stock was up 28%. The strong response was due to a better than expected earnings outcome. First half earnings were up 20% above consensus due to stronger revenues and better cost outcomes.
Marcus, biggest surprise for you?
Large cap portfolios, plumbing supply company Reliance, key positive surprise for us. Profits are up 10%, the stock's up in excess of 20%. We've owned this stock for a while, so really encouraged by that result.
Marcus, I'll stay with you. What was the biggest miss?
Biggest miss would probably be Nine Entertainment for us. Now, we'd put this miss down to 1/3 of the business that sits around TV advertising. The external environment, a bit tougher than we and others had expected. So we've seen the stock come back a bit, but it's an example where we're prepared to look through the cycle.
Michael, I'll come to you now. Biggest miss in your space?
Biggest miss was Lifestyles Communities. Missed on lower than expected settlements and also raising equity. But if you're a long-term investor, I think this creates a great entry point because they have higher settlements in the medium to longer term because they've got the more capital to buy land and they've still got those structural growth drivers.
Next up, biggest sleeper stock. So one that the market isn't necessarily paying attention to when they should be. Joel, what do you got for us?
Racing and Sports, 50 million market cap, provides data and content into the global racing industry. Got some big customers who use their product. They've signed some deals with companies like Stake, which are still to come through. The thing's cheap. It's got really strong operating momentum, and I think it goes higher from here.
Love it. Marcus, what about you?
So for us in large cap, ResMed would be that name. So reported the end of January, stock's off another 4% through February. We think the chief concern around the impact of weight loss drugs on the demand for CPAP is overstated, and this is a stock that's trading on a significant PE discount to where it's been historically.
Michael, this one's for you. True or false? The consumer will be stronger next reporting season.
True, the consumer will be stronger next reporting season. You'll have the benefits of lower interest rates coming through, lower cost of living pressures, also tax cuts expected to come through and improve consumer confidence.
Marcus, for you now, the biggest opportunity between now and next reporting season?
Biggest opportunity we would say is in some of the opportunities in the resources sector outside of iron ore, and it's really around some of these commodities that we've spoken about. Supply constrained, demand profiles that are likely to move higher, and low inventory levels. To that end, mineral sands, Iluka, copper, we've mentioned a number of names, and then lithium as well.
Joel, coming to you now, the biggest risk between now and next reporting season?
I actually think it's the path of interest rates. Reporting season's been great because we're focused on company earnings, the fundamentals again, and the macro's taken a back seat. But the path of those interest rate decreases will become increasingly important, and I think there is some risk that they continue to push to the right.
Michael, quick question without notice. What is the house view on interest rates?
The house view on interest rates is that the US will start reducing interest rates first in the middle of this calendar year, and then Australia will follow with interest rate reductions in the second half of the calendar year.
Joel, last question. What is the final message you have for investors coming out of reporting season?
The variability of results shows that active management's got a real place, right? And I think having specialists who focused on different parts of the market cap and offering different products associated with those is really, really important, so you can define where you want to be investing. We've got a great platform here, the information's shared up and down, and it's really relevant for making those better decisions. So active management's key, variability, and again, things are going to be not happen in a straight line from here, so that becomes increasingly important.
Joel, Michael, Marcus, thank you so much for sitting down with Livewire and chatting through reporting season.
Thanks, Chris.